Let's now shift focus to markets. And South Korea's stock market is facing a sharp reversal after a period of intense investor optimism. The benchmark Kospi has fallen about 30% from its June 19 peak, wiping out a significant portion of recent gains and putting President Lee's market reform agenda under pressure. The government had aimed to make the market more dynamic by reducing regulatory barriers and encouraging greater risk-taking, but the sell-off has exposed the risks of aggressive retail participation, particularly in leveraged products. South Korean retail investors, often called ants, are poured into the market during the rally. Now, many are facing substantial losses, both realized and on paper.
Someone I know put it this way: everyone is intoxicated by the current market euphoria. Analysts are intoxicated, investors are intoxicated, and even those of us who have put in enormous amounts of money are intoxicated.
The market decline is also raising concerns about the growing use of leveraged investment products. Authorities have introduced new restrictions on individual investors trading leveraged ETFs, while politicians have faced pressure over the market losses. Some investors are now turning back to Wall Street, where demand for U.S. leveraged ETFs remains strong, according to the Korea Securities Depository.
It was an absolutely extraordinary period. I wonder if there has ever been a month like this difficult in history. July recorded the largest monthly decline in Kospi history. It fell the most in a single month, even more than during the IMF crisis, minus 33%.
The sell-off has also had a wider psychological impact. Investment channels that were filled with optimism during the market rally are now seeing a sharp shift toward concern and pessimism. There are also reports of rising demand for psychiatric support and other signs of stress that are linked to investment losses.
If this continues, instead of what we call healthy investing, people may accumulate losses over time. Ultimately, many who entered the market may suffer severe losses, and a majority of them could become so traumatized that they lose interest in investing altogether.
The market turmoil comes at a sensitive time for South Korea, as the Lee administration seeks to have the Kospi included in MSCI's developed market classification. The goal is to attract more global capital and bring South Korea's financial markets closer to those of other developed economies. But the recent volatility has highlighted questions over retail speculation, leverage trading, and investor protection. Despite the 30% decline from its June peak, the Kospi remains more than twice its October level. The immediate challenge for policymakers is therefore not just recovering the market, but also rebuilding investor confidence while creating a market that can attract long-term capital without encouraging excessive risk-taking.